Welcome to Dividend Talk, podcast episode 28. Our reflections on 2020. Yo, yo, yo! Welcome back to another episode of Dividend Talk. I'm your co host, European DJI, and today I'm joined with Engineer My Freedom. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavor. If you're new to this channel, please hit the like button and subscribe to us. And check out also our previous episodes on YouTube and Spotify and all of our other favorite platforms. See you on the inside and Merry Christmas! So, hey, Engineer My Freedom, how are you doing today?
Good. It's Christmas time. What's not to enjoy? I have to say, my kids are going to love this episode. They love your yo intros. I remember the first time they did it, they must have listened to it about 50 times, and they've been pushing me to keep saying it, but I'm not quite as good as you at it, so I've left it to the professional.
Yeah, well, I'm doing my best. I'm practicing every day in front of the mirror, and I had some stage fear for the last half a year, but I'm glad that I could give it a try again. It was one of the goals of this year to really do it one more time. Hey, but having said that, this show is all about reflections of the year. But before we go there, what's the news of the week for you?
I'm going back to Bitcoin this week. It's really, really annoying me that it's gone over 21,000. I think I've spoke to you before that it took me a long time to get one Bitcoin. Must have been back 18 months ago. And as soon as I got one Bitcoin, I sold it and bought other, I'm going to say crap. And now it's over 21,000. So I hope anyone who bought when it hit 20,000 in 2017 held it and can get out without losing money. But yeah, it's crazy and it doesn't seem to be stopping. So I'm not in Bitcoin, but I'm happy for anyone that is, grudgingly. How about you?
For me, it was actually Brexit. I mean, almost on Christmas Eve, right? I would have never thought that we would still get a Brexit deal by the end of the year. I really thought this would be a hard Brexit because the two parties seemed so far away from each other, and then suddenly out of nowhere there came a Brexit deal. I'm really surprised with that. I looked a little bit into details. I think there's a lot of propaganda going on at the moment. I think Boris Johnson is selling it better than it actually looks like, but I'm really wondering what's the difference. If you think about what people voted for at the time compared to the deal that they are getting, it rather feels like they're screwed over, like when you're getting a divorce with your wife, that the other half needs to give the other half of the wealth and even more, and then keep paying, I said, for the children and everything on top of that. So,
yeah, Brexit's been obviously the talk over this side all week and for the last month. There's talks of customs. So if we order from Amazon, usually Amazon comes from the UK. Now there's going to be custom charges. The north part of Ireland is going to be. There's going to be a border there, and there's going to be trouble even shipping stuff over from the UK to the north of Ireland. Like, so there's still lots of stuff from my perspective and an Irish perspective that's unclear. I just want it over and done with and out of the news and just move on. Just break up and move on.
yeah, well, I'm indeed. I'm glad that they settled on something, so that we can now move on. And don't worry, because I still love to go to London, and I don't mind taking my passport with me. I do it anyway, so there's not much of a change there.
Cool. Well, hey, this is a positive time of year, so let's move on to more positive topics and maybe some reflections on our year on 2020. It's been one for us too, certainly, that's been unexpected. I mean, we had this podcast and even the blog for myself, but I might start with some stock purchases, and maybe if you want to have a little chat about what your best or worst stock of 2020 was.
So I can tell you what. So maybe not my best stock, because my best performing stock was probably Microsoft, because it almost tripled, I think, when I checked last time in portfolio. But I can tell you what my favorite stock purchase was for 2020, and that's been Johnson and Johnson. So I had the opportunity to buy Johnson and Johnson on the 24th of March at $115. I think it was just at the bottom of the share price for Johnson and Johnson in the year. It was at the bottom of almost the crash. And what I did at the time, I had my watch list ready. So I was prepared for this crash when it came. And, a crash never happens in one day. Usually it lasts like a week or two. And that was the case here as well. So I just put my purchase order at $115. It got triggered, and I'm really happy with that purchase. And then later on in the year, on the 30th of October, so not that long ago, it dipped to 135, which is also a really interesting price for me. It's really a good value there. So I'm really happy with those purchases, because Johnson & Johnson is a stock that I've been always chasing a little bit, and always just a little bit like a carrot in front of me, like it came close and then no. And this year I had my patience was being rewarded, and I was able to add quite some shares, as to how I usually do monthly purchases into my portfolio. So I'm really proud on that one.
Yeah, 115 is certainly an entry point I didn't think I'd see on Johnson and Johnson. So it's a good entry point to get in, and 135 as well is good. What I do like is you said you were prepared. You had your list ready. I wasn't as prepared this year. I was only starting my preparations around that time, so I'm hoping the next stock crash, which will be soon, hopefully, I'll be a little bit more prepared. But no, that's a good pick. They're a dividend rock star, so you can always depend on J&J.
Definitely.
And what about your worst then? What's your worst?
Oh, my worst. Well, I bought on the 31st of January, so just before COVID-19 started to come around in Europe. I bought Royal Dutch Shell, 100 shares for €24. And after that, it was like,
You can't use Royal Dutch Shell against me here.
yeah. and then the next one was ExxonMobil. I bought it for $69 or something like that. Also early on in February, because I thought in January, February, I thought like, oil stocks are doing well. Yeah, the oil price is picking up again. It's recovering. They really, how you say it, were able to produce oil at lower costs. So I thought like, okay, the margins are improving. It's probably good to add some to my energy portfolio. And then, we know what COVID-19 did. Like literally, there were no cars in the street anymore. So the only way was down in this case.
You can have no regrets though, surely. Surely at the time it was a good decision. We just did not know what was going to happen.
Yeah. And I didn't sell any of those. I still have them. Yeah, of course, Shell had a dividend cut in the meanwhile. I stuck with them, which is not usual the case, right? I explained about that earlier on in the episodes, and also on my blog, on why I didn't sell it. But I still feel okay with it. What I have done now due to COVID-19 and due to the acceleration of some other trends, I've just put my energy purchases in the typical oil majors on hold for now. I want to see what's going to happen over the next 2-3 years. The portfolio size is anyway big enough that I can focus my attention to other topics.
Nice.
How about yourself?
So my best one would be ADP, Automatic Data Processing, for a couple of reasons. It was the first post on my blog that I wrote, or that I even researched a company a little bit more in depth. I bought them at, I think, $138 back around March time, and now they're up around 176. I had them valued around 182, so they're around fair value for me now. But for me, they are, I mean, look, 44-year dividend history, the revenue's grown consistently over 10 years, earnings growing, free cash flow under 60. So it's one of my favorite stocks, and the fact that it's up 20% this year is a good thing for me. I kind of wish it was a little bit lower. I'd like to add more. I didn't add enough at the time. I maybe didn't trust myself when I wrote it, and even looking back at the article, it wasn't as in depth as same. I knew like Royal Dutch Shell was the article where I dug deep into companies and set my model into how I research companies. So, but no, ADP are my stock pick of my best stock of 2020.
Yeah, and ADP is also such a stock which you can just count on, right? It's a bit anti-cyclical from that point of view as well. So yeah, I can see why you're really happy with that one. And which is your worst stock pick of this year?
I think I mentioned this before when we were talking about our portfolios and stocks we had, and I mentioned Waco. I don't even know why they're in there. I know I was following the Dividend Growth Investor for a period of time, and I bought these. I mean, they're down 45% this year. That hurts. That hurts.
Yes.
I'm kind of waiting for them to come back to some sort of level where I'm happy to just cut my losses and get rid of them. At the moment, I'm just leaving them sit there and dwindle away. They're still paying dividends and they're still growing them, so that's okay. My second one actually is AT&T, who are down 25% for me this year. I think I bought them when they were just around $35, and they've just been steadily declining in price. Look, I'm not too worried. I'm sure they'll get back to $35 I hope at some point. Really, it's just an income play and a huge dividend. So I might start buying covered calls on them actually, just to try and increase. I'd be happy to sell them at 35 if it got back. So it might be a play. But they were my two worst for this year.
Maybe some food for thought when I hear you speaking. If you say that Waco is almost down 50% for the year, right? 45%.
Mm-hmm.
I don't know how much the yield is at the moment.
Oh, I will check. I don't know off the top of my head. The yield is 4.62%.
Yeah. So there might be companies out there, like for instance, AbbVie, with more growth prospects and a more turnaround play, that you just want to sell your Waco and just put it into a company with a similar yield or even a little bit less yield with more growth prospects for the upcoming years. Because what you're really talking about are opportunity costs. And this is something what investors, I think, often overlook because they want to get their money back that they once invested. There are actually two benefits that you can make use of now. You can do tax harvesting, as an example, if you have capital gains tax. And secondly, from an opportunity cost point of view, forget about your purchase decision that you made, let's say, a year ago, but think about today. And if you would have this money, let's say it represents €1,000, you would probably not invest it again in Waco if you want to look for a company with 4.6% yield. You will probably take AbbVie or something like that, and with which is maybe undervalued, which has also price appreciation maybe ahead of it.
Yeah, no, I understand that. The thing with Waco is it's less than 1% of my portfolio. I'm not talking about big money here. Right. I have done sold shares that were below what I paid for, such as Tanger, I spoke of earlier. CTBI was another one, and I think it was Southside Bank shares as well. So I've no problem with selling them below market value. I think I've used Tanger for my tax harvesting. Waco might be next year. I might use them for that purpose. I mean, so I'm not stuck in that kind of rut. But at the moment, I mean, it's so small in my portfolio, less than 1%. I'm not. It's not doing me any damage that way.
Yeah. Okay, cool. So I'm curious to hear from our listeners as well what their top performers were and their worst performers. So let us know on Twitter or on the comment section in YouTube. But maybe let's look at also a little bit about us as bloggers and having this podcast. So what are your reflections on for instance, in your blog? What has it actually given you? Because it takes quite some effort and time for us to write articles.
Yeah. So when I started blogging, I didn't really expect anyone to read it. I think my English written skills is not the best. In school, I was always horrible at it, and so I wanted to improve that kind of side. But it was also really for me to document my own journey and to detail where I was going. And I think I've succeeded, and I can really start to see that in my stock analysis. I mean, I've learned so much this year from the likes of yourself, the Sunny Investor, Bears Wolf, and loads and loads of people on Twitter. Maybe too many to explain, but it's starting to mold how I've look at companies, how I analyze companies, starting to make my own decisions more effectively and trust in my own judgment a little bit more. And if you look at my stock analysis throughout the year, you'll start, I think, with the first one was AOS, and you'll see how basic it was. And then, as I said, Royal Dutch Shell was a turning point, and I have Intel and AT&T, where I'm getting deeper and deeper every time and understanding a little bit more. I don't try and understand everything at once. I just take something and add to it and add to it and add to it, and I can really see that progression. So I'm happy. I mean, I've over 12,000 views this year, which I did not expect. I'm now, over the last couple of months, hitting over 2,000, nearly 2,500 a month, which is far above my expectations. So I'm quite happy. As you said, it does take time, but I don't mind, because in that time I'm learning about each company a little bit more, about aspects of dividend investing that I didn't know before. So no, I'm quite proud of where I've come.
Yeah, and I think if I look at the article that I think that you will be most proud on, will be probably Royal Dutch Shell, because it was, I think, a really hard one to write. It's not easy to analyze such a company either.
Yeah, no, I mean, I wasn't comfortable with analyzing them type of companies at the beginning, and that took me a long time to compose and to write. And as I said, it's been my turning point on the blog as well. It's been the one that generated the most views, and I start to snowball from there. But it's my favorite article. They are my favorite company this year because I can get them so low. And yeah, I agree. No, it's the one that kind of was a turning point for me.
Nice.
And how about you? I know your blog, I'd be following. It's doing quite well, I believe.
Yeah. Actually, I think so. Yeah. I mean, I don't know compared to other bloggers, let's say, what their numbers are, but I if you think about what I was expecting, definitely, because to your point, I started blogging also, writing down my own thoughts, really, so that I can help myself accountable. And I don't know if you have the same, but and even at high school, I was always paying more attention to what the teacher said. If we had a tough teacher, when I had a teacher that was a little bit loose on the discipline, then I was not listening at all. So I need this kind of discipline, whatever I'm doing, and this is why I thought, like, okay, I really need to start blogging to build in better discipline for me. And this has really given it to me, because also readers hold me accountable by asking really, really good questions. And yeah, so I had no goals. Or maybe a second goal was I was struggling with finding European stocks to invest in, to diversify away from the US dollar, as an example. And I felt like I can't be the only one that has this issue. Hence why I started to focus on this as well. And hence why I also created a blog focused on European dividend growth stocks. And I think many people appreciate this from the people that follow me, because I'm just covering stocks that are not really mainstream. When you look at Seeking Alpha or something like that, you see them hardly being mentioned. So when it comes to the performance of the block, well, I can tell you just from January to now, it has been just a line up. I think I am now having a plateau, or sit around 10,000 views per month, which is really a lot for me. So I was already happy. I remember with the first comment or the first view, and I felt like, if I have like 100 views a week, I'd be happy. So it's beyond my imagination, and it only motivated me to keep pushing content, because that's the most difficult, right? Like having this rhythm to every week push out content. And I'm not doing this only for the readers, I'm also doing it for myself, right? Because I need this focus in my dividend investing.
I can't tell you what I like about your blog, and it is becoming the number one place to go to for European stocks. And the Noble 30 Index was the first thing that caught my eye. And when I'm looking at European companies, it was the place that I'd start. But also writing about these companies that I might never have looked into before. The second bit that I like is your 5 bullets on this. I mean, the consistency to write quality articles, reflection on the week every single week. It's not easy. It takes a lot of time. I know I tried it a little bit and I failed absolute miserably because I just couldn't do it every single week. I couldn't make that commitment. So I take my hat off to you for that. I mean, I don't think you've missed a week since I've been
No,
following your blog. So
no,
that's
no. I started. I think today I will release number 52 because I think I started in the beginning of February or something like that. It's really simple for me. On the Sunday, it is like wake up at 7 or 8 a.m., go behind my laptop, spend 3 hours, and then hopefully, I get some breakfast in between. But usually I see the house waking up, and by the time it's 11, I'm usually done. And the most difficult was if we had plans in the morning, because then I end up writing in the afternoon or in the evening. But I couldn't have done it also without my wife or my kids, who know that this is something I'm really passionate about. So it's my Sunday morning routine, and they really respect that. And
yeah.
that's
And
also important.
we see that with the blog and the podcast. And I know we've had to reschedule. We usually do a Friday night, but sometimes it's Saturday morning, Saturday night, Sunday. So there's a lot of to and fro and a lot to organize with families and keeping the wives happy, keeping them on side. So I mean, you have to give them props
Well,
for support.
the good thing is that the Friday evening is usually when people are wasted and fall asleep on the couch. So it's not like we're missing date night on Friday evening.
When you say people, are you talking about anyone in particular?
No, not at all. But maybe let's reflect a little bit on the podcast, and maybe you would like to say a few words about why we are actually having it and how it got started.
Yeah, I remember. I think you reached out to me on Twitter just to meet up and have a chat, and we talked for a couple of hours about stocks and just all sorts, and it was effortless. Like, it wasn't. I know, like, you meet people for the first time and you meet them online. It can be a little bit daunting, or you can be a little bit nervous. But I mean, we sat there for ages, and we could have went on longer and longer, and we just had an idea. Hey, like, we enjoy talking about this. Why not just start something and talk about our passion online and see if people have enjoyed. And I remember, I think even if you go back, our first one is episode 0, and we call it a pilot because we didn't think anybody would listen. We're like, if this is shit,
I remember that.
if this is shit, we'll just cut it, pretend it never happened, and we'll just move on. But it's for me, I enjoy it. I really look forward to it. I've learned so much. I mean, we get listeners' questions, we get guests on the show, stuff that I never would have even imagined. I didn't even think I'd have the courage to come on air like this and talk. So for me, it's a learning curve. I've met so many great people because of it, and we get to share some knowledge with our community. So I mean, I love it, and we've done it every single week. This is our 28th week. We haven't missed one, so it's
exactly. And what I also like is that we get more and more people reaching out to us, like, hey, I've been binge watching your shows, and this feeling is always great, because I remember really the first time when I discovered dividend investing, and you're like on dopamine, right? It's really a great feeling. So I'm really happy that some people that actually listen to us, that they really have that feeling as well, because I would have never thought that we talking about stocks might also inspire others the same way like that.
And one thing that's come out for me is, I've mentioned to you before, I don't think anybody in Ireland is dividend investing. I've actually met a lot of people through this from Ireland that are dividend investing, are in that community, and they've reached out asking questions. And I mean, it's been fantastic for me, and my network has grown on this side over here. So it's pretty inspiring to read some of the stories. And as you said, I've got some nice emails and comments over the last couple of weeks, and it's motivation, isn't it? I mean, I just want to keep this going, and we're all learning together. We're all in this together. So it's awesome.
Definitely. So what has been your favorite show of the year?
Oh, favorite show. That's a tough one. I think Investment Talk, when we had Investment Talk on, was pretty awesome. I remember sitting there like a student. He was just throwing so much knowledge and information at us, and I was scribbling. I was on mute trying to scribble everything down, and I think that one was one of my favorites. We've also had we did some stock analysis, and I enjoyed them, particularly Munich RE. because I would not have been able to do an insurance company on my own. No way.
Mhm.
So I enjoy that from a learning perspective. How about you?
Yeah, I would say the show with Investment Talk was the same because we get also a lot of questions on growth stocks often. Yeah, and it's hard for us as investors because what I always struggle with is like, okay, I can invest in a growth stock if I know what I want to pay for it, but even I wouldn't know how to sell. And he came on the show, and like to your point, it was just a masterclass for me. So that was probably from a knowledge point of view my favorite one. But I mean, there are so many. We have some topics, right? So stock analysis I really enjoy because doing it together is so much more fun than doing it alone. And the second thing that I like is actually our quarterly portfolio reviews because it keeps us a little bit on track. Like, are we making wise investment decisions or not? Yeah, and we are still in a learning phase. We will probably always be. So I find those also really interesting. But probably one of the things that was for me the most fun is the shows when we are like almost like on CNBC, where we are going through the earnings reports. Like that, we
Yeah.
do 5, 6 companies at a time. Bam, let's go through it. Unsalted opinions, right? Like, yeah, I like that one.
I tell you what my favorite moment was, and it wasn't recorded. We do our dividend day, the last one, and we were watching Intel's earnings live, and they dropped
Yes.
like 10%, and there was a couple of us here, and as soon as we opened that screen, we're like, "Whoa, 10% drop!" And we went crazy. Like, that was my favorite moment. I wish we recorded it because that would have been awesome to have that
Yeah.
recording on, and just to show the passion and it was just the excitement. It was incredible.
And having said that, today we have another dividend day, right? So if there are people that want to join us with a beer or your favorite drink, just join us at 8 p.m. European Central European time. And yeah, but that was really like that was a really great moment.
Mm.
Okay, so I mean, let's keep it here with the reflections on the year. I will be looking forward to next week. Maybe we should actually do more like a forward look at that time. Let's see. Let's discuss the topic, and let's go to one of our most favorite topics of the show, the listener questions. And the first one I would like to call out Richard. So it's not Phil this time. Sorry, Phil. We saved the best for the last. Just kidding. So from Richard, have you considered what percentage of your annual salary you would need to cover in dividends to achieve financial independence, retire early?
I'm trying to put away as much as possible. I know at my current rate, I think I invest around 25 to 28%, sometimes 30. I'm going to get there within 12 years. I do save a total of 40% of my salary overall. With other things, there's pensions, there's other savings, long-term, short-term, overpaying my mortgage and stuff. But yeah, within the next 12 years, I should be hopefully financially free.
Yeah. Yeah, this question is also about the time aspect that you give yourself, right? So I'm on a 50% investment, and if I would get a salary increase next year, I will just add it to my savings, yeah, and my investments. So maybe it goes to 50 to 55% over the next year. And I hope to be at this stage in, let's say, 7, 8 years from now, maybe 10, something like that. But before I turn 50, that would be a nice goal.
We should race each other.
Oh, yes, let's do that. You work for me, I work for you. Okay. So the next one is then from Dividend Wave. And he is asking about our target setting for 2021. So I shared the other day that my year-over-year dividend growth dividend income grew with 21.3%. And the question to you now is, EMF, how did you do? And what's your target for next year?
I only got 123% increase.
Ah!
But you have to remember, I'm at a much earlier stage when the gains are growing so fast. So I don't expect anywhere near that next year. I'm probably expecting close to what you got this year next year, maybe 20, 30%. I haven't sat down to look, but I've reached my goal. My goal was to earn at least €100 a month in dividends, and I'm happy to say that I've got there. So we have to increase that for next year?
I must say there was some dollar impact, currency impact, and many people ask me about it lately. But I would say like it's neglectable. It's probably a few percent. I know that few percent over time makes a lot, but the dollar will go up and down. So
Okay, so we have 2 questions from Phil, and I'll ask you the first one, and it is, what is your biggest learning in 2020, apart from
um,
COVID-19?
so it's about investing. Is just like that you need to be prepared, have a plan, be prepared. So, and one of the things that really helped me with that is having defined last year my allocation strategy, where I just said, okay, I don't want to have 100 stocks in my portfolio. What do I need? So I started learning about diversification. I thought, okay, I feel comfortable with losing, let's say, if one company would go bankrupt, maximum, let's say 5% or 4%. So I went to 40 stocks maximum in different tiers. And now I've got my 40 stocks. I think there are 35 on there that I have defined as a continuous watch list that I look at. And this helps so much. I know what kind of the target ranges are for those stocks that I would be interested to buy. So my biggest learning is to have such a list predefined and keep focus on it and don't be distracted about all the other noise around it.
Yeah, I was going to say mine is the same. It's just to stay focused on what you know, and not to doubt yourself. I know I have my list, which is not the same as your list, but if you were to follow on Twitter or other social media, you'll doubt yourself. If you asking us enough questions, somebody will disagree with you and give you a good reason why they disagree with you. But once you're happy, once you do your own due diligence, and it's stay focused and stick to your lane and stick to what you're good at. But he also asked then as well, what was the biggest surprise for you this year, apart from COVID?
Yeah, that people are reading the content that I'm writing. Yeah, seriously. Yeah.
Mine was the Disney dividend cut. I remember when that happened.
Good one.
Yeah, I remember when that happened, and I was quite surprised. And I sold them at the time. Doesn't look like a wise move. My kids still have them, and they're way outperforming me. So, but yeah.
I would like to say something there because I was thinking about that as well the other day. And maybe I have confirmation bias. I won't neglect that. But I thought like, well, I bought Chubb instead of Disney. So they were for $100. It's now around 150, I think. But I got 3% dividend on it. I'm not having any dividends from Disney. And I was thinking, okay, let's say if I would have now had Disney at 170, would I have sold it? I don't know. When would I have sold it? Because it changes my whole investing strategy. It's not a dividend stock for me anymore.
Yeah, it's good point. It now becomes a growth stock or a value stock or whatever you want to call it. So we've spoke before on these type of stocks. When do you sell, or what's your plan? No, good point. Maybe I don't regret selling it. I do a little bit. But.
Yeah, but that's probably also from the fear of missing out.
Yeah.
And I have that as well, right? That's why I still think about Disney sometimes. Should I have sold it or not?
Good. We have another question from Phil, and he asked, does your allocation strategy take into account in which industry you work, in which country, continent you live, or if you own a house?
Yes, to some extent. If I would have lived in America, I would have probably feel comfortable with 100% allocation in American stocks, because you would get the international diversification by holding those companies. Yeah, then you would just have Procter and Gamble that sells all over the world. So you have your international diversification. But here in Europe, it's much more difficult. I live not even in a euro area, so I need to really think about currency diversification. But other than that, not really the industry that I work in. But I have one rule: I don't want to own stocks in the company that I work for. Not that if something goes wrong with the company, that I suddenly lose a larger part of my my wealth because of that. It's like a double dip.
Sword.
Yeah.
Yeah, I don't take into account where I work or the country I live or if I own a house. I don't consider my house as part of it. So I would consider investing in real estate investment trusts separately. And the same with the industry. I don't invest in the company I work in. I work in a pharma-based company, but it doesn't affect me investing in most of my
Yeah.
competitors.
Okay, cool. And then we have two questions from a person that, and I don't know if I pronounce his name well, so apologies already up front, but from Aros Detom. And the first question is, if you had to choose between Unilever and Danone, which one would you go for?
Oh, wow. I mean, at one point, this podcast was nearly dedicated to Danone, wasn't it? So it's hard to go against them. I think from a valuation or who appears to be undervalued, Danone would probably be for me. I haven't even looked at Unilever in the last while, so I don't even know what price they're coming in at. But I've bought quite a bit of Danone this year, so based on that, I'm going to go with Danone.
Yeah, me too. From a valuation point of view, from a sleep well at night point of view, probably Unilever.
Do you know what I have noticed actually on the TV lately, on a lot of ads? Unilever have now put their brand, that logo, on the top right of their advertisements. It's really standing out to me how many products and brands that they actually are involved in. I just can't stop noticing it lately. So, I mean, that's a good thing. It's
Definitely. So, and then the next question from him is, how much of your portfolio is made of non-dividend stocks, and which non-dividend company are you most heavily invested in? And
none.
then maybe he's also asking if we consider Alibaba.
Yeah, I don't have any. I do want to have a small portion of that at some point, but at the moment, my focus is dividend stocks and to build that side of the portfolio. When it's a little bit more mature, I might focus on growth stocks, but I don't have any. I know you have a few.
Yeah, I've got 10% of my portfolio allocated to it. It's mainly to feed the animal of fear of missing out or these kinds of things. And I mean, growth stocks, I've got Google and Facebook mainly in there. And yeah, no, I'm not considering Alibaba. And I don't know if you have the same, but this name is so funny because there's a little legend, Alibaba and the 40, what is it? The 40 thieves. Do you know this one? Is it also in Ireland?
It rings a bell. I'm not familiar, but
I
it
think it's
does.
the one with "Seize 'em open, open yourself." No. Anyway, that's the association I all the time have with this stock, so I can't take it serious for that simple reason.
Very good. So there we have it. They were the final questions of this year. Again, thanks to everyone for your questions. We've really enjoyed these over the whole year. So keep them coming next year.
Good.
I think now, I get to relax this week. It's the stock recommendation, and I think you're up this week.
Yeah, like lucky you. So my stock recommendation is actually a company that I just did a video on, and it's Anagas. And I think I will put the link to the video in the description of this video. But what I really would like to mention here and why I bought it. So Anagas is a Spanish gas distribution utility. So what they do is they get natural liquefied gas on the shores of Spain, and then they turn it into normal gas, let's say, which can be consumed by us as consumers when we put for our heating systems, or maybe even for our cars if we have gas-driven car. And it acts kind of as a toll gate system, and the company currently yields almost 9%, which is extremely high for a dividend company, even for a utility. So I analyzed it, and because someone recommended it to me to have a look into it, and actually I found it quite defensive. There's at the moment just a lot of political pressure on the utilities in Spain, so there's pricing pressure there. But when I then looked through the numbers, I thought like, well, they can deal with some pricing pressure, and at the same time they are diversifying away into other continents by taking ownerships in other companies in the US, Mexico, Chile, and they are betting on the renewable energy space and doing their investments there. Now, there are some red flags there because their investments have so far not been paying off so well. So this is really something to take into account, and it also required them to take on more debt. And it is a heavy loaded company at the moment with debt. So, but hey, you get a 9% yield for it in return. And for me, the risk reward is really attractive because of this. And yeah.
I see a lot of comparisons or parallels to Royal Dutch Shell. Would that be fair to say?
No, because Royal Dutch Shell is way more sensitive to the oil and gas price, which Anagas is not so sensitive to, because it gets a price for its distribution. So yes, if the consumption is less, you will see it dipping, and it dipped for 10-15% during COVID-19. So from that point of view, and the fact that this is I said a heavily regulated company, you don't really have an upside, when it comes to share price appreciation. But I think it's also more safe or more defensive there. The company is also committed to growing their dividends until 2023 with another 5% per year, and then they want to keep it flat from 2023 to 2026. That's their estimation for now.
Okay. So would you reckon their dividend is safe then? If they've estimated, would it be a sure bet for the next, I don't know, 6 years?
Well, I don't have a crystal ball, but if you ask me, is it safer than Shell at the time? Yes, that's what I think, because of the nature of their business. It's a utility. It's not an oil production company. Yeah, and that's, I think, a really important distinction. And you should see it more like an electricity distribution company, like your national grid.
Yeah,
that's more how you should see it.
Okay, yeah, like 9% does seem attractive for a utility, and certainly if they've committed to increasing their dividend 5% over the next 3 years, it's certainly something that I consider. But like when you're selecting a company like this to review, how did you pick Engas, for example?
Because someone recommended to me to have a look into it. It's really simple. So, and I looked into it. That's what I do when readers recommend me stocks. Sometimes I get 6-7 stocks at the same time. That's a bit hard. But, this reader is always quite engaged. So he recommended it. I looked into it. And in the beginning, I was a little bit scared because I started looking at the debt and such. But then also Eloy Snowball reminded me that we really should look at funds from operations for these kinds of companies. So I started to do that. And then actually I started to like it a lot more. So remember, it's a 9% yield. It's a red flag by definition, right?
Yeah.
But I still find their dividend relatively safe, provided that politicians don't start to squeeze more on them. Yeah. And this is probably the most unstable factor. And there is also here an assumption that gas is the transition energy over the next 10 to 20 years, while we are transforming more and more in renewables as a society. So these two are really the things that you need to keep paying attention to. But I use this 9% just to invest in other companies. Yeah, and this is so nice. So over 10 years, if nothing happens to the dividend, I will have earned the whole capital that I put into it back, and I will have used those dividends to buy other companies, because that's how I'm looking at it. And now I can buy a low yield company, which I usually would not buy, but with a lot of growth prospects. So I can mix it up a little bit, and that's really why I bought Anagas. And secondly, I had only one utility in my company, that was Red Electrica, and now it's the second one with Anagas, both from Spain.
Okay. So the burning question I have is, did you like them enough? I haven't watched your video, so maybe you've answered this. I'm a bad co-host. But did you like them enough to initiate a position, or would you initiate a position in them?
Yeah, I bought 100 shares.
Okay.
Yeah. So it's already half a position size for me.
Okay. I will watch that video. I've just been enjoying Christmas too much, but I have,
rightly so.
I have seen your one slider, and I think you've put it on Twitter and stuff as well, but it's pretty awesome. I mean, yourself and Dividend Wave have a competition now. Who has the nicest one sliders?
Dividend Wave. He was the first one, and he gives the most context. I did it mainly for myself to, what I struggle with is later, if I want to quickly grasp what I thought about a company, then I either end up reading my whole article again from the blog,
Yeah.
which takes me 10 minutes. And if I now build just a collection of one pages, I can just quickly refer to it. I see what I liked at the time, and this is really why I started building them.
Yeah.
But Dividend Wave gives so much context. So I would really recommend following him and check out his one sliders because they are great.
Yeah, I agree. Every time I have a company, I normally just ping him or tag him, and he'll have a one slider literally within seconds. So
Nice.
it's awesome. But hey, no, that's a great recommendation. I'm looking for to add utilities. I do already have Red Electrica. I don't know if I want to add another one from Spain. But I'm going to watch your video. I'm going to read your blog, and I will see. But yeah, nice stock pick. Thanks very much.
So this concludes the show for us, and the last show of this year, and hopefully many to come, of course, in the next year. But Derek, I just wanted to thank you for the 28 shows that we have done this year. I really love them. You're a great partner to talk with. I like we say really often, I always look forward to the Friday evenings. There, it's like really nice at 5 p.m. to close down my laptop from work and start thinking about we have another podcast recording tonight. So thank you for that. You brought me a lot of insights. I learned a lot from you, and yeah, I wish you also a really happy new year already.
Yeah, I have to return the same. I mean, I've robbed some of your sheets, your fundamental analysis, and I've really started to incorporate a lot of stuff. And we chat offline quite a bit, and I normally ping ideas off you. And look, it's great to have a partner to just throw stuff at and get an honest opinion. I don't want someone to tell me, yeah, you're doing right when really it's not. So I've really enjoyed talking to you and learning. And hey, look, this was your idea. You approached me. You came with this, and I mean, it's far exceeded my expectations. So, like you, excited every week to do it. That's why we're still sitting here over Christmas recording this. And I mean, look, I love it. So thanks a million to you and to all our listeners. We wouldn't still be here if our pilot episode 0 episode absolutely failed. So thanks a million to everyone for listening, commenting, messaging, and sending in questions. I mean, it's what keeps us going. It's what keeps us in the community. And long may it last.
Thanks all. That's just what I would like to say. Thank you all, and Happy New Year.